I own a gold company, so some of it is just, I think, dismissed. But for whatever it's worth, I have theses and theories that I've been saying out loud recently that no one's talking about. And I believe President Trump is trying to bring back manufacturing, and I've laid out a detailed scenario on how I believe he's going to do it. And in 2019, I'm screaming about the BRICS, and I'm the only one saying this stuff publicly. And in 2019, I'm screaming about the BRICS. Everyone says you're out of your mind, Andy. And lo and
BRICS
behold,
countries. BRICS
yes,
countries, yeah.
And now everyone understands it. But the point of it is that I think that speaking with conviction, using facts behind it, and integrity, that's something that means a lot to me.
All right, yeah.
And I don't think we've seen anything yet as it pertains to gold. The whole new story is being written on gold. It is being rewoven into a monetary system, Dan. It's being rewoven right in front of us. And, I think that this is just chapter one.
Well, from your lips to God's ears. I mean, we had a whole century from, I guess, call it Wellington's victory to World War I, when prices did not, there were bouts of inflation. There was war in the U.S. and other places. But overall, it's basically the century of deflation, which is the norm and ought to be the norm in developing, modern economies. Then, of course, we all went off the gold standard for World War I, and then 1933, and all the rest of it. And here we are, thinking it's normal to pay $6 for a gallon of diesel and whatever. I mean, it's just.
Well, what's interesting about all of that? You said something there that I've never heard someone say quite that way, and it really resonates with me about it should be deflation. Prices should get lower with technology and innovation.
Abundance, right? I mean, yeah.
Right? So if you take any asset you can think about, let's use a house. Let's go back to 2005, because I've said this before, I know it. In 2005, price of a house in middle America, if you Google it, it will say it was about $240,000, the average price. And gold was $450. And if you do the math, that's 530 ounces or thereabouts. Today, the average price of a house, according to Google, $500,000. And gold is, what, $4,300, $4,400. So if you would have used the 530 ounces that you were left by your grandfather in 2005 to pay off your house of $240,000, you would have had no debt. And your wife says, you know what, let's leave that for Junior. Let's leave it for our son or daughter. Right. We'll pay off the house. Well, look, 21 years later, your house has doubled. It's done well. In dollar terms, it's doubled. But that 530 ounces now will buy you 5 houses almost fully furnished. So did the price of your house go up twice, or in dollar terms, or did the dollar fall in half? In other words, did gold? You can buy 5 houses for this non-interest bearing asset that sat under your mattress for 21 years earning nothing but dust, and it's gone up 500% or fallen 500%. In gold terms, deflated, but in dollar terms went up. Any asset that you can think of, you measure it in gold terms and you will see what you just said is true. This is the whole reason behind tying gold to the monetary system, is that it does just that. It retains its value, and even any asset you can think of is going down in price, whereas in dollar terms, everything is going way up. It's just that the dollar is a melting ice cube, and gold is the mere opposite of that.
Yep, and those other assets include, for example, stocks.
Yes,
gold has beat stocks this century.
Yes, it has 9.9% since 2000. On gold, 9.6% with dividends reinvested on the S&P 500. No one reinvests all their
with reinvested. Dividends. Yeah, that's generous. That's a generous accounting. But yeah, because you're right, nobody does that.
Right. So, but yeah, it's, you don't own gold to become wealthy. You own it because it is wealth. And the smartest people in the world, just like 6,000 years ago, when gold and silver were mentioned 700 plus times cumulatively in the Bible, here we are 6,000 years later, and the most well-informed traders on the planet, that being the central banks and whoever the hell is doing it here in the United States, are saying, you know what, I'll take delivery. Thank you very much.
But Andy, Bitcoin's going to displace all this. Bitcoin's the new gold, man. It's scarce.
Well, I have made a habit, Dan, of trying to give a big hug to the Bitcoin community. I speak on many Bitcoin channels: Mark Moss, Natalie Brunell, Paul Barron, Swan, Bitcoin, Crypto Banter, because I think in many respects, we all see the world the same way. You're old enough, like I am, to remember the old Reese's peanut butter commercial where two guys are walking down the street. One guy scooping peanut butter, the other guy eating chocolate. They bump into each other. You got your chocolate, my peanut butter. You got your peanut butter and my chocolate. They each take a bite and say, wow, that's good. I think we see the world the same way. One wants to profit, one wants to preserve. So why not marry the two ideas together and say, look, you don't have to be a gold bugger. You don't have to think that Bitcoin is the next gold. But look at the two of them together and how it strengthens your portfolio and your understanding of monetary history and of the situation we are in. I am not a Bitcoin person. I own basically one, only because I didn't want to kick myself 30 years from now saying I should have at least, since I talked about it, I should at least owned one. I've been buying little bits here and there.
Yeah, that's my thesis. Yeah, that's my thesis in one sentence. You don't want to not participate to some small degree in this.
Yeah,
absolutely.
But I think that the two communities should unite instead of being divisive.
Absolutely. I wish more people on both sides. Yes, I wish more people on both sides would do exactly that.
And I go on these shows and I stole the virtues of owning metal, and I don't badmouth Bitcoin. I say I'm a neophyte. I don't own squat, and own very little. But I know that we go into the same door for the same reason. Now, when we walk in the door, we may go this way, but
but you're in the same room, yes.
Yes, and you can use the Las Vegas analogy as a good I think explanation. You can sit at a table and make a lot of money, and if the longer you sit there, the chances are you're going to walk away poor. So take some of those chips, put them in your pocket, so when you go to the cage, you walk away with some money. Take some of that profit, put it into gold, and let it ride, and leave your initial investment there and pull it off and put it into gold. And then you understand both sides of the equation. And really they're saying the same thing, that the system is broken. And one of them is barely a teenager and the other is over 6,000 years old. So which side do you want to end on? And I just think there's no reason to bash either, but to embrace both ideologies and have a little bit of both.
All right. So I tried to egg you on, but you gave a fantastic answer. Yeah, not going to fall for it. Good for you. Good for you, because there's a lot of folks on both sides that are just sort of, they're doing that binary. It's just like in politics, right? It's team red and team blue constantly going at each other, and
which is another thing that bothers me to no end. It's about being an American and seeing a common thing, and the divisiveness that we've seen really is disheartening. For me, I grew up in a house that my parents were hippies. I played college baseball. I'm a jock who grew up in that environment. Liberalism means a lot different to me than it does today. But the point of it is that, you don't have to believe in something to understand it. You don't have to celebrate something to respect it. I mean, I don't know. Anyway, don't mean to get off track, but I would just simply say that we're a whole lot better when we realize that we're all here for the same reason. We don't need to be at each other's throats over politics. You don't need to be defined by who you voted for in the last election. And I did vote for President Trump, and I would do it again. And I'll tell you something, Dan, if I had more time, I would tell you my thesis about how I think he's going to bring back manufacturing. And I truly do believe this is what he's trying to do.
Okay, we got some time. You can sum that up for me, because that's a topic of great interest to me.
All right. Well, let me tell you what I think. And thank you for allowing me the stage on this, because it means a lot to me. Now, I'm either stupid or just have just enough courage to say this out loud. And I've been saying it in front of very smart people. And I don't get much pushback. I get a lot of, wow, that might be. Now, let's start with the fact that we're broke, right? We're 39 trillion in debt. But that excludes Medicare, Medicaid, Social Security, government, military pensions.
Yeah, it's 100 trillion. All that. Yeah.
Yeah. So we're broke, and a trillion seconds ago was 31,688 years ago. So for all intent and purposes, we're broke and insolvent. Number one. And if we added all of those unfunded liabilities to debt to GDP ratio, we're well past that 300 debt to GDP ratio where no one's ever come back from. They've either hyperinflated or defaulted. Number two, we don't make anything anymore. This is called Triffin's dilemma. And this is kind of the center of what I speak of. And by the way, the previous economic advisor, a true knucklehead, Jared Bernstein, who couldn't explain how treasuries were created, embarrassed the heck out of himself, but he did write a report called Dethrone King Dollar, which advocates for abolishing or losing the reserve status. It's a privilege we can't afford anymore, as has Vice President Vance on several occasions spoken of Triffin's dilemma. We can't do it anymore. The concept of Triffin's dilemma says if you're the reserve currency, the world needs more dollars than we can provide through trade alone. Let's use Cambodia as an example. We don't do much trade with them, so they're going to need to sell their Cambodian currency in the open market to buy dollars in order to buy oil and transact global business. So over time, they continue to do this. The difference, erosion of their value, the currency value against ours is substantial. So someone says, well, let's send our T-shirt manufacturing company to Cambodia. We'll make a whole lot more. And that's what happens, is that the world needs more dollars than we can provide through trade alone. So they have to sell their currency to buy ours, and creates these imbalances. Our dollar's too high. We can't sell our products to the world in a very high dollar because the cost of converting to dollars first is prohibitive. So the theory is if you're the reserve currency, you will never have a trade surplus. That's number one. I believe they are quietly, very quietly, trying to shed the reserve status. You look all around the world, you see all these countries in the BRICS that are setting up. In fact, they just announced, the Financial Times just announced it 2 days ago, that they're rolling out mBridge. They're ready to do it. That's the cross-border payment system that was designed by China, Hong Kong, Thailand, UAE, and Saudi Arabia, along with the BIS Innovation Hub. Cross-border settlement of local currencies, and the whole idea is to settle imbalances in gold. China's already signed up the SIPs, through SIPs, the Asian countries in Southeast Asia. There are 800 million people, twice the population of the U.S. Mm-hmm. China's largest trading partner by far. They will trade local currencies with one another, settle imbalances in gold. The thesis here is that we are moving away from just one currency to other countries using their own currency, settling imbalances in gold. Now, the dollar's not going away. It still has the most robust rails. We don't want to be the reserve currency anymore. Let me show you how that would work. All right. First, we're broke. We know that. We don't make anything. Triffin's dilemma. We've offshored all of our manufacturing, largely. Ray Dalio just came out and said 60% of this country has a literacy rate under the 6th grade. Really? So we're uneducated. We're broke. We don't make anything. And here comes AI just in time to kneecap all the jobs. So what do you do? How do you look your children in the face and say, you too have a future, just like I did? You too, the world is your oyster. Really? What job are you going to do? What are you going to do? My son, who works for me now, was an accountant at Price Waterhouse, getting paid to analyze a real estate investment trust balance sheet. What do they need him for 80 grand a year? They don't. Done, says AI. Analyze, done. Get away, kid, you're gone. So the point of it is that we're broke, we're insolvent, we make nothing. Here comes AI. Just in time, and we're uneducated, by the way. So what do? I think Trump understands this. No matter what, we must bring back manufacturing. We cannot be reliant on other countries, namely China, for everything from aspirin to penicillin to aircraft parts to military components. And if we do, we're dead because we make nothing. We're broke. We're insolvent. No one wants our treasuries anymore because of our fiscal irresponsibility and our monetary brain-dead policies. This is why you're seeing countries shed treasuries and buy gold. What do? Here's what I think he wants to do. Number one, all of the things that we've seen with tariffs and the craziness and the pushing away, maybe there's intent on that. Maybe he wants other countries to trade with other countries in their own currency, not be so reliant on trading the dollar. Let's just throw that out as a thesis, just maybe, all right? But the real nuts and bolts of this program would work starting with the Genius Act that goes into effect next January. Most people don't even know what the Genius Act is. It is diabolically genius. What they do is from January on, anytime that you spend dollars anywhere in the world, it will move like that on a stablecoin network, backed by stablecoins, backed by short-term treasuries, 90-day or less. A little bit of cash and 90-day or less short-term treasuries. You have just created synthetic demand for the U.S. Treasury. So when people say, is Warsh a hawk or a dove, it doesn't matter. You've just nailed short-term interest rates to the floor, and you've nailed them with 1,000 nails. They ain't never coming up, because anytime money moves, short-term treasuries are created synthetically to pin the front end of the curve to the floor. Dual mandate of the Fed, gone, done. You have pinned short-term rates. Anytime money moves around the globe, it will be blockchain, like instant transfer, use stable coins, and then backed by short-term treasuries. Now, the interest on those treasuries, according to the Clarity Act, is not transferable to you or to me. It is the issuer of those treasuries that gets to decide what to do with the interest. So the primary beneficiary of this, there will be many that do it, JP, Citi, Bank of America, they'll all issue, but they all have to follow the Genius Act rules, which be backed by short-term treasuries and the interest isn't transferable. What if they all got together and Trump said to them all, like Tether, who was under investigation and then went away. And now, by the way, the CEO of USA Tether is none other than Bo Hines, who was Trump's crypto czar until last August. The rules that he implemented, he's now benefiting from. And he looks at him, wink, wink, nod, nod. Now, you guys you're no longer in trouble. But here's what you're going to do for us. You are going to take that interest and you're going to buy gold. Lots of gold. You're going to continue to buy gold with all of that interest. Now, what has Tether done for 3 years in a row? They have bought more gold than anyone in the world but the Central Bank of Poland. They've been buying over 1,000 metric tons at a pop. Boom, boom, boom. They're buying more gold than anybody, right? And what does that do? Well, that devalues the dollar, because the only way that you really devalue something or measure the value of something is to do it in gold ounces, not in currency terms. Mm-hmm. Remember, Triffin's dilemma said everyone's selling their currency to buy ours. The dollar index is a faulty measuring stick. Mm-hmm. Measure it in gold, which is the neutral barometer by which everything is measured. So you continue to buy gold. It goes up, it goes up, it goes up, it goes up, it goes up. The dollar goes down, goes down, goes down, goes down. And now you can sell manufacturing to the world because that's what they've done to us. And number two, you find it easier to pay off your debt. But that's just part of it. This is where it gets interesting. Judy Shelton has been on my show. Judy Shelton has been on my.
Yes,
she's been on my show twice. Mm-hmm. Once with me, once with Michelle McCory. Judy was Trump's nominee to run the Fed in 2016. Mm-hmm. Judy says to me, Andy, in no uncertain terms. Now this is where we're getting very close. She says Trump has told me that on July 4th, 2026, it will be the biggest day of his career, of his presidency. It's the 250th anniversary, and I believe he will link a 50-year treasury to gold.
Yep,
and in her book, she said 5, 10, 20, 30, but originally starting with the 50. So, and all of them except the 50 will have zero coupon. The 50 might have a 1% coupon, no interest rate. So you have a zero coupon bond redeemable in gold. Now, here, let's start to add things together. Van Eck funds just came out and said, you know, if the dollar did lose its reserve status, this isn't me talking, this is Van Eck. We see gold at $139,000 an ounce, and they had this big paper about it, their emerging market bond team.
Right.
If you have to sell a $20 million bond, redeemable in 20 years, let's say, forget about the 50 for a moment, we'll just make it easy. 20 years, we owe $20 million in gold. At today's rate, that's about 4,500 ounces of gold. If Van Eck was right, because you don't even have to revalue, remember, Percent said we're not going to revalue gold, but what if Tether, who's buying all this gold for you by proxy, Bo Hines, the CEO, you guys are going to buy this gold, you're going to sell it to the Treasury. Shh, don't tell anyone. We're going to do this by proxy for the U.S. government, and as the price of gold keeps going higher, 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 the dollar goes lower, 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 lower. We can sell our product to the world. We can pay off our debt. We're going to buy that gold from you. You're all going to be rich, and no one's going to. You're right off into the sunset. That gold is going to back the Treasury. But if it takes 4,500 ounces of gold today to pay that off in 20 years, what if Van Eck Funds was right? And it went up to 139,000 as we soft default on the reserve status. It's about 130 ounces of gold that we would owe then. But what would that allow us to do? A zero coupon bond would mean we have zero upfront borrowing costs. We can bring back all of our manufacturing and build it out, update it, make it new and ready to go. And in an environment where the dollar keeps falling in value and gold keeps going higher, not only is it easier to sell your product to the world and give our children a future, a shot. Richard Russell, my mentor, said, Andy, we're screwed. The Fed can either inflate or die, period, because we've offshored all our manufacturing. There's three ways to pay off the debt: inflate, default, or produce more than you consume. Well, Doug Casey talks about that all the time. We definitely don't produce more than we consume. How can we do that? Bring back manufacturing, give our uneducated children a chance at a life, in an environment where the dollar is dying. But if we make stuff and can send it out to the rest of the world and build back our manufacturing along with our IT prowess and the ability to combine the two, we have a future where maybe, just maybe, we can eventually grow our way out of this problem and become the engine of manufacturing like we once were. Now, the downside is we are no longer the reserve currency. You save in dollars, you will go broke. The downside is I could see Trump coming up and saying, look, this is what's going to happen. We squandered a good deal, but this is how we give our children a chance. We bring back manufacturing, but it's going to come at the expense of universal basic income for a little bit until we get our feet underneath us. But this is our duty. It's just like Andy Dufresne, Dan, in The Shawshank. He had to crawl through 2 miles of crap to get to the other side. But there was that moment. And I think there's no way that we don't crawl through that crap. Somehow, some way, this might actually give us a chance. So the higher gold goes, the easier it is to follow. And the one last thing I'm going to tell you that made my day. Now, I've been saying this publicly for a year. And a lot, some people, sure, could happen. Maybe, it's interesting. It could work. It's elegant. It pays down the debt easier, gives our children a chance, brings back manufacturing, all of that. The one thing that I saw just the other day, which put a gigantic smile on my face, was the new hire for Fed Chair Warsh. His name is Paul Winfrey. And he's a top conservative economist, and he's now the key policy advisor to Warsh. And what's interesting about him, he is, he's been around the block for a long time. He's a former Trump deputy assistant for domestic policy. He's in the Heritage Foundation. There was a paper that was written called Project 2025. It was like 50 economists, and they all took a chapter. And his chapter was chapter 24, the Federal Reserve chapter, where he seriously explores returning to a gold standard to fight inflation. And he actually highlights gold convertible treasury instruments, AKA gold bonds, what Judy Shelton wants. And so the point of it is that this would allow, instead of going to a gold-backed system where there's no monetary ability, your monetary ability is restrained by the gold. Instead, you can still do monetary policy. You're not backing the dollar. The dollar is the tool for trade. You don't want to hold your wealth in dollars. Instead, the gold-backed bonds gives us the ability to still enact monetary policy, but the redeeming, and in fact, the worse the dollar gets, the higher gold goes, which makes paying off the debt in gold ounces easier down the road. So I guess all I'm simply saying is this. I don't know how else we bring back manufacturing, because if we don't, we're broke, we're insolvent, we're uneducated, we make nothing, and here's AI. Good luck to y'all, to the young kids. I think this is a fighting shot. I hope to God I'm right. I truly do. We'll find out real soon. That's my thesis.